All right, guys, happy Monday. It is 10 a.m. my time. I'm on the west coast of North America. Though it actually doesn't help because there's a lot of different time zones if you're on the west coast of North America. Anyway, Seattle time, 10 a.m. So good to have you guys here. Some things are shifting, some things are changing. A lot of times when the market goes sideways, that really scares people. So, what I'm going to do, let me jump over to sharing my screen with you. Let me get the most amount of real estate on this price chart. And so sideways scares a lot of people. So I want to talk about sideways and I want to look at specifically small caps today. I'm just looking at IJR. It's a small cap ETF. So just kind of big picture, I'm looking at the sector or the slice or the segment. Lots of words kind of can mean the same thing, but I'm looking at small caps here because what I basically saw was just them kind of breaking above that. And if I zoom in on IJR, I saw this break above here. Now look, it is still sideways, right? Because we have all of this information up here. But this was an important enough break because that was about a 6-week break that price could not get above. And so for small caps, price finally got above that and it's consolidating above that. So there's always going to be, you're never going to have a 100% perfect setup, right? So one of the things I often train my students in is to get comfortable knowing that you see this resistance above it, but also knowing that it's breaking above that and it's been going sideways. So meaning it was consolidating sideways. You can see that. And I could bring it down here, but notice between here and here, we're looking at small caps here. The base, the foundation, right? So this was the foundation of small caps, okay? And then it became right here. So this support here was that resistance over there. So sometimes technical traders call that polarity. I call it support resistance. Sometimes I talk about where the buyers and the sellers are hiding. So there's some strength going on right now with IJR and KRE. Now, KRE and IJR might be looking very similar because a lot of the stocks in KRE is regional banking, but you can see a kind of a very similar, in fact, on KRE, it looks much better. That's a much stronger break. And similarly, you have all of this noise up here, and I'm looking at this specifically. But what I want to do, guys, I want to focus on just small caps today because they have been going sideways for a while. If we look at where they are right now on IJR, it's 112. And back, what is that, March 9th, 6 weeks ago, we're kind of right back at the same price. So I wanted to just dig in, and I did a quick scan on small caps to see some that popped to the top of the list. And the first one I saw that came was this thing, XPEL. So I'm going to look at it zoomed out first. And whether you're trading, specifically with trading, you want your trading filter to get your short list, and then you want to use a closer in filter to make sure you get the buys. But here's a small company, under 2 billion, trending up and to the right for the last 3.5 years, had this consolidation here. And from top to bottom right there, 23%, had a breakout, if you can see that. Tried to break out of that, got pulled back in. Specifically, I'm looking at that breakout there because I'm going to zoom in on this in a moment. But it's above that price. So there's two ways that you can enter a trade. You always want price to push you in, but you can wait for a price to break out to a new high with strength. So that's what XPEL is doing right now. So it broke above its old lifetime high there. And so that's a sign of strength. Now, it could still come back and correct, which is always going to scare people. The thing I'll say is most people are accustomed to putting in way too much money in a stock. So let's say they have a $100,000 portfolio. They may put in $20,000 or $30,000 in a stock and then put a 7% stop loss. Well, if you put a 7% stop loss in here, it just gets back to its breakout level. So most people are mismanaging the size of their initial position. Whereas I'd rather put a smaller position in and know that it could come back down here and test this and then move higher. But I saw XPEL, it has broken out. And I think it's got a lot of good upward momentum to go from here. This is at lifetime highs. So that is moving higher. It's breaking up and out. It's auto parts. I mean, I like the story behind it. Auto parts people fixing cars. I read an article that used car prices are going through the roof. Everyone wants a used car now, which it adds to the story. I add the story after I look at the price. So this is XPEL, XPEL Inc. Okay, so that was the first one I saw. And I'll do a few more here. VUZI. So this is going to look a little different. This is a technology company, still small caps. It's 1.6 billion. And let me just quickly zoom out to make sure I'm looking at what I think I'm looking at. All right, so couldn't break above kind of the 950 mark here. Finally broke above it at the very, very end of 2020. So when I look at things, I want to look for the positives and the negatives. So one of the negatives is it's gone up 25x. So whenever you own something that's gone up 25x in a year, one should expect, as you can see here, volatility. But this thing moving down 43%, you would have no idea visually that that was a 43% correction. So when you start looking at stocks that are moving up 5 to 30x in a year, expect a 40 to 50% correction. Now you may say, well, I don't want to lose 40 to 50%. That's actually the wrong way of looking at it. It's more of, oh, I'm buying something, and if I want to buy it, I need to expect a 40, 50% move. If you don't want that, then you want to be looking for when these big movers, fast movers, they do correct 40 or 50%, which it did here, and then it moved higher. What I liked about this was these two double bottoms right here. And let me zoom in here and go to VUZI here. Again, it's above this right here. So I like that. There's a place where you know you're wrong. So in my trading course, everyone wants to come in at different frequencies. Like someone wants to be a swing trader. Someone wants to be maybe be in 5 or 6 weeks trader. But one thing I teach them is I actually want you to trade less, but what I do want you to do is to know when you're wrong. So if VUZI closes below here and you are looking at this on a shorter, more swing-like, that would be your first sign that maybe this is breaking down. But again, here's that 43% fall right here, where if you go intraday, it was a 51% fall. So this is another good thing. If you're looking at stocks, if you're looking at symbols that are up 10, 20, 30x in a year, and it closes, it does a 50%. But look at here, it fell 50%, it was 51% intraday, but it didn't end its uptrend. It did that crazy correction while still trending higher. So a lot of when training someone, a lot actually has to get untaught to them. So here's an example where a 51% correction is like, yeah, show me symbols that have gone up 5 to 30x in 12 months, and then show me ones that have corrected 40%, and you now have a great filter. So I like this. It had a double little bottom here. There's a lot of information right in there, as you can see. There's a lot of polarity in there. Like it sold off, and then it started buying. Between here and here, when it broke above that, it got sold off. The sellers came in, but then the buyers started coming in there. So I like that, but it's not for the faint of heart. You have to understand what you're buying, and most people don't, right? You can't treat VUZI the same way you're going to treat GM. They're different size stocks. One can move 8% in a day. One might move 8% in a quarter. Though GM, I'm giving GM, I'll just quickly look at GM. It's not part of my small cap review, but I do think it's going to be a double this year. Okay, so VUZI, NTLA, I'm going to do a couple more. I think this is beautiful. Let me quickly zoom out and look at, just to confirm what we're looking at here, just zoom out 20 years. Okay, IPO'd 5 years ago, couldn't get above this $30, finally got above it, and it just rocketed. Now this is up about 8x. Anything above 5x, guys, you're going to expect volatility. So look at this. I just think this is beautiful. So it corrected. I'm going to 45%. But when we go in, look at this. NTLA. So that's the correction there. Intraday, 52%. Again, here's a symbol that's up 9x in 12 months. Now I'm super zoomed in now. That was a beautiful correction. So why am I liking it? It's back above this zone again, and it's making its fourth attempt. It's rare that a symbol takes 5, or I should say takes 6. The symbol will almost always only knock 3 to 5 times on a price resistance. So this is, let's call it its fourth time, really kind of knocking up here and really looking to just scream higher. And yes, it's done a big move up, but finally when it got above this range here, it really started moving higher. Had this correction here in 21, as you can see, 52% intraday, but it's just right back up there. So that's strength, right? You want to buy strength. And this is what we're looking at here. So we're looking at small caps because small caps have broken out of a sideways trend. I've dug into the small cap universe a little bit to just look at some of the symbols and see what they're doing. So this is LTHM, about a $3-ish billion market cap company. IPO'd over here at this price. Okay, IPO'd at this price right here. Okay, I see that right there. I see that. But notice it couldn't sustain itself above this. Like it got above that, and up until the end of 2020, beginning of 21, you can see that back in 2018, it sold off. Right, so I know you can see it, but sometimes this is easier. Right, so it did that. So that's strength, right? IPO'd at 17, had a little correction, attempted to stay above the 17, got sold off, could not stay above 17, went through 2 years of horribleness, end of 2020, breaks out above the 17 again. Super important. And also, I do see that, guys. It broke above that. Couldn't sustain it. The sellers came in. People liquidated their shares, but there it is right back at that old lifetime high over here. In many ways, the top of the yellow line, the top of the yellow zone is more important because that's where it IPO'd, and it's been staying above that. So I like that. This is also a correction that would have scared the heck out of a lot of people. So if we go to NTLA here, that was the scary correction there. 52.44. Oh, sorry, guys. I'm like, I don't think those symbols are the same. So if we zoom back and look at LTHM here, it's just looking like a beautiful setup. It's at some resistance right now, so you're going to watch that. Resistance is about $19, as you can see this right here. It's at about its resistance. My little cursor. It's at about 19. So that breaks above 19. That's going to be a nice kind of position of strength. Like, hey, we're going for it again. We're going for 24. Again, there's always the risk that sellers come in at 24. What's nice about this is there's a defined loss here, right? So if it breaks below that, you could either do that intraday low, or you could find, depending on what price chart you want to look at, you could say if it closes below that point right there, then that's your sign you're wrong. So this is not necessarily the best risk reward like a shorter term. This would be more of a longer term trader, someone who's finding something that has pretty good strength, pretty good power behind it, and is looking to move higher. So I like LTHM. Okay, 2 more, guys, then I'm gonna hit the pause button. Okay, EV. Let's look at EVLO. I picked a bunch of different stocks for similar reasons, for different reasons. So here's its IPO here, clearly sold off when it got above its IPO. It's down here, had a messy, it's probably a little bit more than a 50% correction. I like that it's consolidating. I like that there's clear definition of where you're wrong, right? So if it closes below that 995, you're clearly wrong. It really wants to get back above. Now, this is a really small company, not even $1 billion in size. It wants to get back up to there, but it's showing some strength today. The biotech sector itself is showing strength. As far as a buy, I wouldn't buy it until it broke above that point because I want to see it break above. That is not a symbol that I just typed in. EVLO. Oh, geez. There we go. I'd like to see it break above that right there. But that's a nice consolidation to watch, especially if it starts accelerating price. Price is what you want to, you want to pray at the altar of price direction. Once you know price direction, which is important, then everything comes down to how you are understanding yourself. You're mad, you're sad, you're glad, afraid. I know most people don't want to talk about it, especially men over the age of 40 or 50, but there's only 4 feelings a human brain can have: mad, sad, glad, afraid. And you better believe it when you start buying investments, whether you're trading them or investing in them, it's going to load up your mad, sad, glad, afraid. I like this one. This is a similar small one like EVLO. In some ways it's a mess, but it stopped its huge steep downtrend. You can kind of see here it did a double bottom, which I kind of like. This is a crazy, what is this up? Let's call it 8x. Then it's down. Notice where it stopped. So where it stopped caught my attention. It stopped where it peaked before, right? Where it couldn't get above before. It stopped falling now. So that's the polarity I'm kind of talking about today. So you can see how it's there. And then as we zoom into this, LXRX, what I like about this, probably more than maybe any other symbol, if you buy, let's say above here, it's a clear buy, it's a clear zone of strength, right? Because if it breaks above, that can't break above $5.40 between this period. So if it finally does, then it's gonna want to get back. It's gonna want to get back up to, I have to squint here, my eyes are getting bad, $8 or $9, right? So that's about an 80% gain. And if you're wrong, you're risking about 13. So you're risking 13% for 90%. Let's just make it really easy. You're risking 15% for 90%. So that's a 1-to-6 ratio. So that is more of a trade. Okay, so some key takeaways. Position sizing is incredibly important. Most people are using the wrong size to get in, and then when the symbol moves against them, they really get freaked out, of course, because they have a lot of money on the line before they really figured out if the price was moving in the direction. Guys, this is about clarity and it's about control over your money, whether it's about control over your investing. I did start with IJR, which could easily be an investment of one of the slices, segments, and areas of the market that has shown great strength. This year-ish, it's up 22%. I think the S&P is up about 12%. So it's beating the thing that's really, really hard to beat. So these live calls, you can look at it both investing and trading. So if you like this, guys, you're gonna love my free course. It's absolutely free. It's called Control and Clarity. Is it Clarity and Control? I think it's Clarity and Control. In working with men and women for 23 years, one of the things, they may not say it this way, but they want clarity over their investments. They want clarity over their investments. They don't want 50 or 100 symbols like their big box advisor or the industry has taught them to do. Collecting symbols is dangerous. Hoarding symbols is dangerous and very expensive. Fewer symbols, better performance. But it's about clarity. And the Clarity and Control course, completely free, literally shows you how to start to get that clarity, bring that clarity back in your life. And then when you have that, you start experiencing more and more control over your money. And what a great area of your life that you want to have that experience of having more control, especially as you get into your 40s, 50s, 60s, and 70s. you're going to start to know, I want to make sure I'm going to be okay. So that's Clarity and Control. Check it out. It's in the description below. Thanks, guys, for being in my world. I appreciate you, and I will see you on the next video. All right, guys. Thanks.